Welcome back. Appreciate you staying with Morning Live. Now, low demand for global air travel due to COVID-19 restrictions has had a negative financial outcome for many airlines, with some actually ceasing operations altogether. The situation is not that different in South Africa, as the national carrier South African Airways is yet to resume its air operations after government's announcement in June that it was selling a 51% stake in SAA to a Takatso Consortium to give the airline a new lease of life. Now, the Comair Group, that includes Kulula Airlines, has also temporarily grounded its planes due to stricter regulations. And yesterday, labour unions in the sector filed an urgent application with the South Gauteng High Court to place Mango Airlines under business rescue. The airline failed to pay salaries for more than 2 months due to continuing financial problems and unpaid debt. So to talk to us more about these developments, South Africa's aviation industry, low consumer confidence, and the bleak future of low-cost airlines, at least from what it looks like at the moment. We're joined by Dr. Jaochim Vermooten, who is an independent aviation economic specialist, and Zazi Nsibanyoni-Mugambi, president of the South African Cabin Crew Association. To both of you, thank you so much and welcome to Morning Live. Dr. Vermooten, let me start with you. The COVID-19 pandemic has had a negative impact on global air travel, and South Africa, of course, not being spared. But how bad is the situation actually at the moment? Because it is, of course, unfortunately something that predates the pandemic. But how bad are the challenges at the moment?
Good morning, and good morning to your viewers. It's a very critical situation. The COVID regulations are very draconian. And as you are aware, we were limited to Gauteng, so you can fly from Oliver Tambo to Lanseria Airport, but nobody wants to do that. And as a result, most of the larger capacity low-cost airlines actually stopped operating and are awaiting the lifting of the regulations for restart. You must remember that business travel has reduced significantly because people have become accustomed to video conferencing, and a very large extent leisure travel is requires an open market. You know, you don't need any restrictions. The moment that there are any restrictions, then people don't buy, so you need an open market before travel will actually recommence.
And Zazi, for your part, yesterday the South African Cabin Crew Association, the Mango Pilots Association, and the National Union of Metal Workers of South Africa said that the unions had filed an urgent application with the South Gauteng High Court to place the airline under business rescue. Please explain to us just how dire the situation is in that regard, with salaries not being paid for 2 months already.
Absolutely. I think for these three unions, it was a decision that was not taken lightly and easily. But we understood the situation that Mango was under. It has not been capitalized for a very long time. And you'd recall, Sakina, back in the SAA business rescue process, we had asked why Mango and SAA Technical and the subsidiaries were not placed under business rescue, because we believe they should have. And I think we're seeing the results of that. So Mango is really struggling financially. And, the 819 million that was gazetted has still not landed in the Mango bank accounts. So it's really tight. Mango has cancelled forward bookings, so they're taking bookings, 2 days at a time to avoid the risk. So it's dire. Employees of Mango have not received salaries since the 25th of May. So the decision to place Mango on business rescue was also on the back of the Airgen liquidation application. They are going to court in August, and the only solution, which, by the way, has been backed up by the SAA board. They recommended business rescue. The Mango board recommended business rescue, but no one has taken the action to actually place Mango under business rescue, We believe it will give the airline a little bit of reprieve and to restructure and take to the skies with a solid plan. So that's what led us to that particular decision.
Dr. Vermooten, if we listen to that explanation from Zazi there, many people would ask the question that the unions have asked, why weren't Mango and the other SAA subsidiaries also placed under business rescue at the time when the SAA was placed under business rescue?
Oh, that's a very good question. And the people that has to answer that is Department of Public Enterprises and the Minister and the business rescue practitioners. It's very clear that Mango played an integral role in the whole SAA strategy. So it should have been restructured during the time that they were looking at SAA.
And if we look at what is being said of the business rescue process, that amount of 2.7 billion rand we were told would be for the subsidiaries of SAA, and of that 819 rand, and please correct me if I'm wrong, Zazi or Dr. Vermooten, 819 million rand was due to be paid to Mango. So let's talk about that. And has government basically let down the sector in approaching the situation as it did? Let me start with Dr. Vermooten and then I'll come to you, Zazi.
Well, there's a lot of conflicts of interest in this matter because the money has to go to SAA and from there on to Mango. And SAA is in financial difficulties as well. So it's actually money that was originally earmarked for them. However, there is an act out to make that possible. But in operations, it's also a question of conflicts of interest because Mango and SAA's restart will actually compete on the same routes, to go on. So, it's been very difficult to read because their decisions have been changed. At the time, SAA's domestic operations would have stopped and everything would have been transferred to Mango. And, at the moment, there's a competitive situation on the major routes. However, Mango has developed a market share and a bona fide attractiveness to its customers. So it should be able to chart a course, although a lower course of action than it has been before.
And Zazi, from your side, because also in addition to answering that question, one just gets a bit of a sense of deja vu if you think about what happened to the employees at SA Express and what happened at SAA, and seemingly we're going through all of that again.
No, absolutely. And that's our biggest fear, Sakina, is that if we do not act and wait for government to act, there might not be an airline in a month or two. And just on the 819 million, it's been appropriated and gazetted on the 20th of June. The 819 is earmarked specifically for Mango. And we've asked time and time again from the DPE why this money has not been paid over to Mango whilst employees are not receiving salaries. And you would appreciate also, it's not even just about Mango. The subsidiaries include SAA Technical and Airships. That money has also not been paid. And these people have a direct link to the success of Mango, SAA, and the likes. So this holding back of the money and not getting answers from the DPE is really putting us in a very precarious situation. And I mean, if you looked at the routes, like Dr. Vermooten said, there needs to be a strategy. There needs to be a strategy on how low cost feeds into the full service and create a proper, structure in order to feed off each other, not compete. And that's the work that SAA and Mango must do. But in the meantime, we are getting silence from the DPE. We're not getting real answers from the SAA board. Hence the decision to put Mango under business rescue. And Sakina, we have asked for government to join us and let's collaborate in this process for the interest of Mango and have our business rescue practitioners, because that speaks to the SA Express issue, where we need to make sure that we have a quick process, not the over a year that SAA had, We need to make sure that it doesn't just cut jobs. It really looks at a proper restructuring plan, something that we believe didn't really happen at SAA. So there's a lot of work to be done. And unfortunately, DPE is not giving us the answers that we require. And we are not going to go down that route of express. Hence the decision for the business rescue.
So as things stand right now with employees who haven't been paid for 2 months, Zazi, speak to us about the state that they find themselves in right now and what is being communicated to them at the moment about when they are likely to be paid.
Nothing. It's dire. And we are that voice that tries to keep them calm, trying to keep them reassured. We basically playing the role of management in this situation and trying to keep the airline in the sky. We are the ones asking them to just try and put together money, try come to work so Mango can continue to fly, although they're having to borrow and put it's dire, Sakina. It's not a pretty situation. Hence our worry. And let me just add, Sakina, another worry that we have is the Takatso Consortium obviously comes with a low-cost player, which is Lyft. And then you have in the very same consortium now that they've acquired SAA, you have Mango. So we have to ask, why are we not getting answers from the powers that be? What are their intentions with two competitors in the low-cost space? That's a big question that must be answered. And their reluctance to put Mango under business rescue raises a lot of suspicions on our part.
Dr. Vermooten, you did touch on this, but how do you see that particular part of the lack of a clear strategy in terms of Mango and the role it will play once SAA takes to the skies again? Because in June, the Minister of Public Enterprises, Minister Pravin Gordhan, did announce that government is selling that 51% stake to the Takatso Consortium. And it was said it was in order to give the airline a new lease of life. And they were expected to resume operations between July and August. But at this point, there doesn't seem to be much clarity, or maybe you are aware. Is there a clear indication on when this will happen and how do further delays actually worsen the financial state, not only of that particular airline, but the subsidiaries as well?
Well, there's been a lot of spilt opportunities up to, say, when SAA went into business rescue, many takers to buy Mango, and it could have been restructured very quickly. You could have downscaled it to appropriate levels, and you would have a viable operation immediately. So I would think that if there's not a clear strategy at SAA for Mango, they should look at the opportunity to actually sell Mango to investors that would like to make something of it,
So, and it goes to Zazi's question, why didn't they look at that, especially given the consortium that has now acquired that 51% stake and so many questions about how this is meant to work out. And, do you think that if you were to advise them, Dr. Vermooten, what should they do in the immediate term in order to try and find some sort of clarity in this particular deal?
Well, it's very clear that you should develop a viable business plan that's reasonable under the current COVID assumptions. That means a very smaller type of operation, determine what the retrenchments would be and what the cost and the restructuring would mean. And in that way, if you craft a proper business plan, that should be a sellable instrument to actually go and find recapitalization elsewhere.
And Zazi, just a final word, the way forward now. You have lodged that application in the courts, but where to from here?
Sakina, I must respond to the retrenchment issue because that seems to be, the first place people go is target employees. And if you look at Mango, it's got 741 employees. It's not a big airline. And the first place to look at is the plan. and thereafter then fit the employees into that plan. It's a lean airline. It's not overstaffed, really. So that's what we're trying to avoid, because normally it's VSPs retrench and you're still left with the same problems that you started off with. But I just want to say, in comparison to Lyft and Mango is strong in the market. They have not been taking forward bookings. They've literally been taking bookings 2 days at a time, and they still reach about an 80% capacity. So they've got a strong target market. And also, they're accessible to the demographics of this country. I mean, you can go book at Edgar's, you can book at Checkers. It's a good brand, and I don't think it can be substituted with Lyft. And we just implore the DPE at this stage to really come and work together, collaborate, because they should have nothing to hide if we do this together. We have the same intentions to see Mango succeed, and pay Mango the salaries. These employees have come and they've taken cuts, 50% cuts on their own decision in the past. So we really just really want Mango back into the sky and to be successful. It's a good airline.
Well, thank you so much for your time this morning. That was Zazi Nsibanyoni Nsibanyoni-Mugambi, President of the South African Cabin Crew Association, and Dr. Jaochim Vermooten, who is an independent aviation economic specialist, talking to us about the latest development around Mango and, of course, more broadly speaking, to the airline aviation sector in the country and what's happening there at the moment. And once again, the most revolting set of circumstances that, again, workers not paid, employees who have gone, done the work, not paid, and it's just another day.
This is a story that's just, it's getting old now. It really is. It just is affecting every industry. But this is devastating. It really is devastating.
It's not right.
Yeah.
It's not right. And we would be up in arms if we didn't get paid
without a doubt
for coming to work. And we saw this with SA Express, we saw that with SAA, and now again with Mango.
Yeah, no, it really is. It really is. But we have to leave it for our SABC 2 viewers at this point. Let's please stay with us for SABC News.